Hey everybody, welcome back to Taking Trades and happy Friday to you. Jump down in the comment section right now and let me know how much you love pinball trading action in natural gas futures. I know I do. So in today's episode, I'm going to show you the recent pinball action in natural gas. Then we're going to break down today's action in UGAZ and DGAZ. And then at the end of this video, I'm going to give you a little treat. That's right. I'm going to show you another one of my trades where I went nibbling. So with that, let's begin. Yesterday we talked about support and resistance levels on the natural gas futures chart and the increased possibility of a price action pinball game this week. The reasons for this are slightly milder temps over the next week in combination with the weekly storage report that disappointed us just a little bit. Not a massive disappointment, but more like a little baby disappointment. We all know that it's likely that we're looking to next week's storage report before any real moves happen, and so it seems everyone's just sitting on their gas trading hands right now. So right now, I'd like you to take a look at this chart with me to get a visual understanding of what is happening in natural gas. Let's jump over to the charts. All right, I've got the natural gas futures chart up here. I've got the daily time frame going. And I want to point out one difference you're going to notice right now is you can see I've got /NG F20. So before we had Z19, and that's the December futures. And now we're going to switch over and we're going to go with F20, which is January of 2020. So that's what we're going to be referencing now. So go ahead and switch your charts over if you prefer this style, and because this is where I'm going to be drawing my support and resistance levels, and I'll be making decisions and talking about price action based off of this chart. So feel free to switch over if you like. All right, so what we're looking at here is, and I'll go ahead and draw some lines back in, but we had sort of our top, we had our overhead area, our overhead resistance that we've touched here, and we've touched here, and we'll go ahead and keep that in place. And that'll just give us a reference for where things are, where we might encounter overhead resistance moving forward. Now you can see our 200-day simple moving average moving across and really showing nice respect here. You can see all these touches along it. And then we have our gap. And I'm going to go ahead and just draw in that gap area on the top and the bottom. Got that drawn in, so everything looks good there. And now we kind of have a general idea of where we are in terms of support and resistance. I'm going to draw one more right in here, not to get things too confused, but that seems like a legitimate level there as well. So, pinball. Why do I keep saying pinball? Well, let's talk about this. We talked about the other day how when you have this overhead support level, because it's the bottom of the gap, and you look down to this support level here, in combination with the 50 simple moving average, which is the red line, and the 20 simple moving average, which is the blue line, when those two come together, they seem to kind of create a supportive environment where price action can sometimes settle in and then move away. So it would tell me here that we've kind of settled into this area and that then we could move back to the upside. But you can see we pushed down, respected the support level, then we had our green day, then we had our red day, now we have our green day. So this is just pinball action around in here like we talked about yesterday. So we kind of knew this might be coming because the natural gas report was disappointing but not devastating. So it was not really positive, not really negative. Things are just kind of so-so. The temperatures for the rest of this week are, and going into next week, are not as cold as they were prior. So things are just sort of holding steady and people are kind of sitting on their hands. So just to talk about what I think might happen moving forward is that we could get some pushing up and pulling back between this overhead resistance level and this underneath support level. And we could just continue with a little bit of pinball until we get to Thursday when we get that natural gas report. And one thing I wanted to point out is I had a subscriber mention that that report lags by a week. So all that cold weather that we had where temperatures got really frigid and we got that Arctic blast that moved in, all of that action is going to be reflected in the upcoming natural gas report. So what we've got is the possibility of next Thursday being a little more volatile, a little more explosive, because I'm guessing that we're going to finally see that withdrawal that everybody has been waiting for. So pinball action, waiting around, hoping for that withdrawal next week. And if we flip over to UGAZ and take a look at its pinball action, you can see a prime example here of price action that is basically down, down, up, down, up. We're just sort of holding in this area, not doing much of anything. So it's kind of interesting how this is playing out. It's just being quiet, and we've got the bottom of our channel there, and I'm just going to kind of call that the top of the channel there as far as our gap goes. And then we gap down again, so we've got some different levels working here, so we definitely need a catalyst to push back up through that, and I think that catalyst is going to come by way of a natural gas report that gives us our first withdrawal. I think that's going to cause a lot of people to get excited. A lot of people are going to pile in. I think it'll go higher beyond that if we get the withdrawal. Now, if we flip over and look over at DGAZ, we can see the exact inverse situation because that's our inverse ETF for natural gas. And as you can see, we've still got our gap here. And basically, we might be pinned right now between these two moving averages and the top of this gap. So another up, up, down, just general sort of sideways pinball action. And I imagine as relation to everything else, we'll continue that until next Thursday. Okay, time for the treat. We're done with natural gas. We looked at UGAZ, we looked at DGAZ. Now I'm going to give you one of my personal trades that I've been working on for a while now, kind of nibbling away. That's right, nibbling away at these shares, building a position, and then writing what is called a covered call options contract. And I'm going to show that to you right now. Let's jump in. So I'm going to show you one of my personal trades, and this is on ticker SFIX if you want to type it in and take a look. It's a company called Stitch Fix, and Stitch Fix has been trickling down and has reached some lows. It's been pulling back. It's been stretching. You can see the downside MACD getting some stretches. We just recently had a little stretch in here, but what I wanted to do was go ahead and nibble small share size until I got to 100 shares. And the reason why that's significant is anytime you want to write an options contract, one contract is 100 shares. So you have to have 100 shares in order to do anything in the options market. And that was my goal with Stitch Fix. It's a company I like long term. And in addition to that, it has good implied volatility. If you don't know what implied volatility is, I'll leave a link below so you can take a look at that. That's what makes the world go round in the options world, is implied volatility. So I identified this as a stock that I liked, and now what I'm going to do is go ahead and turn on my trades. I'm going to apply those trades, and then you can see what I've been doing here. So I initially was trying to get a position down in here after it pushed up. I was watching it in here, it broke above 20, and I said I'd be super interested in this, possibly if I could get it close to 20. Well, it left without me, and that's okay. I just said, all right, I'm going to wait for it to pull back, maybe look for some support, and we'll go from there. When we hit November 4th, it pulled back here, and it looked like it was setting up a nice base of support, and I'll even kind of draw a line in here. It looked kind of like that line was sort of holding a lot of candles. So I thought, all right, maybe we're going to track out to the 20 and then move higher. So I went ahead and I nibbled 25 shares at 23.89. I took those and then I held, and I said, let's just see what happens. We went by 1, 2, 3, 4 days, and we got this drop. And when that happened, I thought, okay, what if we're reaching for the 50 and then we're going to curl back up? So I went ahead and I added 25 more at 21.79. Then we got the full break the next day down, but then we revealed this lower wick, which shows some buying pressure. So that got me interested, and I added 25 more and 25 more, and I ended up getting my final 50 on November 11th. So this was actually a pretty quick progression. It was an add, and then 2 more adds. And since then now, we've pushed back up to the upside. And if I open my active trader window, you can see right here that I'm long 100 shares at 21.91, which is my cost basis. That's my average price that I've paid. And I'm up $31.56. And you might say, oh, that's really not much for a stock where you have 100 shares. Well,
The long-term play is where my vision is. I'm looking down the road. I'm looking down the road, 3, 5, 6, 8, 10 years where I'm nibbling, adding, and writing contracts. So once I have a position that I've nibbled into and I'm comfortable with it and I have a good average price on it and I feel like it's now time to shift over, and now I want to start reducing my break-even point. So right now my break-even point would be $21.91. Does everyone agree with that? Do you understand kind of what that is? Just average price. But when you add options to it, you can start to pull your break-even point lower, so that if the stock dips a little, you're below it and you're still green as long as it's above your break-even point. And this is how this happens. Now I'm going to show you something that I don't think I've gotten into before, but under the trade tab, you will see the options chain, and you'll see this little tag right here. So I went out and I decided to sell a cash covered call. And what that means is I own the stock already and I'm selling premium, a call against that position. If you don't have the stock already, then that's called a naked call, and that's a different discussion. But right now I have the 100 shares, I'm selling a call, which means for each share of stock, for 100 shares, I'm going to receive a small payment for writing the contract with another party. So what I did was I came in here and I said to myself, when I looked at this chart, I said, and I guess originally I said, okay, I'm in here at $21.94. I don't think it's going to go above $23 before my expiration date. So when I came over here, I went ahead and selected $23. That's what is known as a strike price. It's the price that has to be breached in order for something to happen. If it's not breached, then the contract just expires worthless. And regardless of whether or not it expires worthless, I still keep the premium money. So what happened in this scenario was I got paid 50 cents just to hold the stock and wait to see if it's going to go over $23. So right now you might say, ooh, you're getting close. Look at that. It pushed right up to 23 and then pulled back a little. And that's okay. I'm just going to wait and see what happens. If it starts to breach, now you have to remember, my expiration date is December 13th. So it could go above and then come back below and then go back above. We don't know what's going to happen. But as I get closer to expiration, if it is above, and the consequence of being above when it expires is that somebody can buy those shares from me at the strike price of 23. So if the stock's at $26 and it expires, somebody can buy my shares from me at 23, and then they could immediately sell those shares at 26 for a $3 per share profit. So that's kind of the upside for the contract holder. Now, it's an upside for me anyway, because let's say they do buy them from me at 23. Well, let's look at my average price, $21.91. So I'm going to make money either way. So if this expires and someone steals the shares from me, not steal, they get the opportunity to purchase them from me, I will still make money on that end as well. And here's the beautiful thing. That money that I receive to hold these shares, and actually I misspoke, I got paid 55 cents. So here's what happened. The $21.91 was my average price. Once I sold the covered call and got paid 55 cents, I tucked that in my pocket, and that's $55. What did that do to my position? Well, you can see right here, it lowered my break-even point. So now, if the stock goes below $21.91, I'm actually still green technically until it drops below $21.26. Now, every time this contract expires or I get an opportunity to move it or what they call roll it, I'm going to get paid a small credit to stay with the trade, and that will continue to drop this level, drop indefinitely as long as I want to hold this position and sell premium. So the covered call is a great way to take long stock and make it make you money while you hold it. It's a very interesting concept. It works so well. And if you want more information, a great resource to go to is tastytrade.com. They have a ton of information you can look at. But I wanted to show you guys my nibbled position That's how I got my 100 shares. I didn't buy it all at once. I bought in on the drops, because if I'd have bought it all in here, say I bought all of it at $23.89, look where I'd be. I'd still be down. But now, because I waited and added in small chunks and sold the options contract, I'm now up $31.56 with the future opportunity of continuing to write these contracts. So anyway, hope this was super interesting to you. This was my options trade I wanted to show to you. This is how I nibbled to get comfortable. Hope you all were green today. Leave me questions and comments below. If you're new to the channel, hit that subscribe button. Lots of people watching this video right now are not subscribed. So leave me a comment, introduce yourself, try us out for a week. We'd love to have you, and we'll see you tomorrow.